Well, today's certainly been an interesting day for the stock market. In case some of you aren't aware, Robinhood CEO Vlad Tenev and our hero, DeepFuckingValue, aka Roaring Kitty, aka Keith Gill, testified in front of the United States Congress today, in light of the trading scandal that occurred on January 28th when Robinhood placed restrictions on people buying stocks and only allowed them to sell the stocks, which is also known as market manipulation. I did make an entire video detailing pretty much everything about this topic, so I'll drop a link to that in the description so you can check it out if you like. In this video, basically, I watched a testimony so you guys didn't have to. This is going to be a condensed version of the entire testimony with me explaining a bunch of details about it. A bunch of people spoke, but for the purpose of relevancy, I decided to focus on DeepFuckingValue and Vlad Tenev. Also, the lag in these videos are not my fault, rather the representative's fault. Considering most of them are fossils who don't know how to use modern technology, they didn't set it up very well. There was not much I could do about the lag, but I tried to increase the video quality as best as I can in post. Also, big shout outs to Representative Al Green, who decided to wear a mask to a webcam testimony. Before we get started, only a small percentage of people that watch my videos are actually subscribed. So if you end up liking this video, consider subscribing. It's free and you can always change your mind. Enjoy the video. So without further ado, grab your tendies and buckle up, cause it's gonna be a hell of a ride. Vlad Tenev, the Robinhood CEO, comes in initially around 17 minutes in.
Not just a select few. We dreamed of making investing more accessible, especially for people without a lot of money. The stock market is a powerful wealth creator, but only half of U.S. households participate in it.
Mr. Staff, I would like you to use your limited time to talk directly to what happened January 28th and your involvement in it.
Certainly.
Madam Chair, the witness has the opportunity to give their own testimony.
Excuse me, you are
Use
not
your time for your questioning.
You are not recognized, Mr. Please go right ahead and speak directly to the question.
McHenry.
Mr. McHenry, yes, of course.
We created Robinhood to economically empower all Americans by opening financial markets to them. I was born in Bulgaria, a country with a financial system that was on the verge of collapse. At the age of 5, I immigrated with my family to America in search of a better life. I have benefited from all America has to offer. And Robinhood's mission to democratize finance for all has a very special significance for me. Robinhood's platform allows people from all backgrounds to invest with no account minimums and zero commissions. Contrary to some very misleading and highly uninformed reports, we see evidence that most of our customers are investing for the long term with features like fractional shares, dividend reinvestment, recurring investments. Our customers can start with small amounts and grow their investments in blue chip stocks and ETFs over time. We've always recognized the responsibility that comes with helping people invest. We'll continue to enhance our educational platform to help customers no matter where they are in their financial journey. Hundreds of free educational resources are available to everyone on our Learn website right now. While markets fluctuate, this tells me our business model is working for everyday Americans. The total value of our customers' assets on Robinhood exceeds the net amount of money they have deposited with us by over $35 billion. This tells me our business model is working for everyday Americans, the Robinhood community. Many people say that Robinhood has helped them to pay car loans, reduce student loan debt, meet daily bills, save for the future, and we're proud to serve them. You've invited me today to discuss the events of last month, and I welcome this opportunity. In late January, many brokerage firms saw a massive increase in trading activity in a handful of stocks. Prices were moving dramatically day to day, even hour to hour. One specific day, January 28th, proved to be a completely unprecedented event. The spike in trading activity and volatility meant that Robinhood Securities, our clearing broker, had to hold the line and post additional firm capital as collateral to support our clearinghouse deposit demands. To put it in perspective, on January 28th, our daily deposit requirement was 10 times more than on January 25th. As a result, Robinhood Securities, along with many other firms, imposed temporary trading restrictions on certain securities. We began allowing limited buys of these securities the following day, and we have since lifted the restrictions entirely. There are 2 points I want to make clear about these temporary restrictions. First, Robinhood Securities put the restrictions in place in an effort to meet increased regulatory deposit requirements, not to help hedge funds. We don't answer to hedge funds. We serve the millions of small investors who use our platform every day to invest. Second, Robinhood immediately secured additional funds. Altogether, through capital raising and other measures, we've increased our liquidity by more than $3 billion to cushion ourselves against increased collateral requirements and related market stress in the future. Despite the unprecedented market conditions in January, at the end of the day, what happened is unacceptable to us. To our customers, I'm sorry and I apologize. Please know that we are doing everything we can to make sure this won't happen again. And I want to highlight one more thing. The existing 2-day period to settle trades exposes investors and the industry to unnecessary risk. There is no reason why the greatest financial system in the world cannot settle trades in real time. I believe we can and should act now to deploy our intellectual capital and our engineering resources to move to real-time settlement. Together, we can solve this. Before I close, I want to sincerely thank the millions of customers who continue to use Robinhood to access the markets every day. We are grateful and committed to you. Members of the committee, I appreciate the opportunity to answer your questions.
I don't know what's worse, the fact that Vlad is very evidently speaking like a robot reading from his script, playing the victim card, mind you, or the fact that Maxine Waters does not know how to mute her microphone. That was unedited footage, by the way, everyone. In my personal opinion, Robinhood should be liquidated for the market manipulation crimes they committed, and should not even be close to getting left off the hook with Vlad's unsincere apology. At around 37 minutes in, our hero, DeepFuckingValue, aka Roaring Kitty, aka Keith Gill, returns to deliver his initial testimony.
Thank you, Chairwoman Waters, Ranking Member McHenry, members of the committee. I'm happy to discuss with the committee my purchases of GameStop shares and my discussions of their fair value on social media. It is true that my investment in that company multiplied in value many times. For that, I feel enormously fortunate. I also believe the current price of the shares demonstrates that I've been right about the company. A few things I am not. I am not a cat. I am not an institutional investor, nor am I a hedge fund. I do not have clients, and I do not provide personalized investment advice for fees or commissions. I'm just an individual whose investment in GameStop and posts on social media were based upon my own research and analysis. I grew up in Brockton, Massachusetts. My family was not wealthy. My father was a truck driver and my mom a registered nurse. I was one of 3 kids and the first in my family to earn a 4-year college degree when I graduated from Stonehill College in 2009. That was not a good time to be looking for a job. From 2010 to 2017, I worked at a few startup companies, but there were significant periods when I was unemployed. I took an interest in the stock market, and even though I had very little money, I used those times to educate myself and learn more about investing. In April 2019, after nearly 2 years unemployed, I accepted a marketing and financial education job at MassMutual. My wife Caroline and I were thrilled that I had an income and benefits. My job was to help develop financial education classes that advisors could present to prospective clients. I was not a stockbroker or a financial advisor. I did not talk to clients, and I did not recommend stocks for them to buy. Before and after I joined MassMutual, I studied and followed stocks. One of those was GameStop. In early June of 2019, the price of GameStop stock declined below what I thought was its fair value. I invested in GameStop in 2019 and 2020 because, as I studied the company, I became more and more confident in my analysis. 2 important factors, based entirely on publicly available information, gave me confidence that GameStop was undervalued. First, the market was underestimating the prospects of GameStop's legacy business and overestimating the likelihood of bankruptcy. I grew up playing video games and shopping at GameStop, and I plan to continue shopping there. GameStop stores still provide real value to consumers and reliable revenue for GameStop. Second, I believe that GameStop has the potential to reinvent itself as the ultimate destination for gamers within the rapidly growing $200 billion gaming industry. GameStop has a unique opportunity to pivot toward a technology-driven business. By embracing the digital economy, GameStop may be able to find new revenue streams that vastly exceed the value of its business. I am hardly the only person who has advocated these points. When I wrote and spoke about GameStop on social media with other individual investors, our conversations were no different from people in a bar or on a golf course or at home talking or arguing about a stock. Hedge funds and other Wall Street firms have teams of analysts working together to compile research and analyze shares of companies. Individual investors have those resources. Social media platforms like Reddit, YouTube, and Twitter are leveling the playing field. The idea that I use social media to promote GameStop stock to unwitting investors and influence the market is preposterous. My post did not cause the movement of billions of dollars into GameStop shares. It is tragic that some people lost money, and my heart goes out to them. But what happened in January just demonstrates again that investing in public securities is extremely risky. As I said earlier, I consider myself and my family fortunate with our investment. When the stock price broke $20 in December, I knew my investment was a success. I was so happy to visit my family in Brockton for the holidays. The money will go such a long way for us. We had an incredibly difficult 2020. Most difficult was the tragic and unexpected loss of my sister Sarah in June. I am grateful to be in a position to give back to and support my family. As for what happened in January, others will have to explain it. It's alarming how little we know about the inner workings of the market. And I am thankful that this committee is examining what happened. I also want to say that I support retail investors' right to invest in what they want, when they want. I support the right of individuals to send a message based on how they invest. As for me, I like the stock. I'm as bullish as I've ever been on a potential turnaround for GameStop, and I remain invested in the company. Thank you. Cheers, everyone.
I like the stock. You like the stock. We all like the stock. A very well-spoken response from DeepFuckingValue. I would also like to deliver my biggest condolences to him for the loss of his sister. Dollar Tree webcam incoming.
So expand, if you would, on how that process benefits the everyday investor. And just expand in general on that, if you would.
Congressman, I'd be happy to. Thanks for giving me an opportunity. So as I mentioned in my written testimony, payment for order flow enables commission-free trading. Prior to Robinhood changing the industry standard model to be commission-free, most brokers collected a commission on top of the payment for order flow on every transaction. Now, Robinhood routes to market makers, including Citadel Execution Services. We've got 7 in total across equities and options. And we route without consideration for payment for order flow. All payment for order flow arrangements are uniform across the market makers. And our system routes orders based on who provides the best execution quality for our customers. So the reason Citadel gets a relatively high percentage of our customer order flow is because they provide superior execution quality for our customers. And that's first and foremost the most important consideration that we look for. How are our customers getting the best execution quality? If another market maker were to improve upon the execution quality that Citadel Execution Services provides on any subset of orders, our system is set up to automatically route more traffic to that market maker.
Continue.
Okay, Vlad constantly patting himself on the back for Robinhood being industry changers despite them literally making the market collapse is quite off-putting to me. But it speaks to Vlad's character more than anything.
One of the problems I have, for example, you're allowing up to $1,000 to buy stocks on margin. And borrowing on margin is risky. So how do you disclose this? how do you make determination of individuals who are not the sophisticated investors and allowing them to buy these risky stocks that are on margin?
Thank you, Congressman, for the opportunity to address that. Let me set the stage a little bit by saying that about 2% of our customers borrow on margin. About 13% on a monthly basis perform an options transaction, and a much smaller number, around 3%, perform a multi-leg options transaction. So the vast majority of our customers are engaging in buy and hold activities and long-term investing on our platform. Now, to clarify your point on the $1,000 margin, that's actually something that we refer to as Robinhood Instant, and it's provided as a courtesy. When a customer initiates a deposit, we allow them access to up to $1,000 of that deposit immediately, similar to how if you deposit a check at a bank, as a courtesy, they might provide access to those funds or a portion of them before that check clears. As for margin specifically, borrowing money on margin, the rules are very ironclad industry-wide. Obviously, Robinhood Securities conforms to all of the applicable rules, and Robinhood's product is in many ways more restrictive than that of our competitors, because in order to even qualify for borrowing on margin, you have to be a Robinhood Gold customer, which involves paying $5 a month for the service.
So I think that you have, you say that everything is restrictive, but when you are going after the less sophisticated investor, it's more than that. There's a greater responsibility that you have, because they have, they could lose. And when they lose, it could make a determination of whether or not they can pay their mortgage or their rent or not. And they could be taken advantage of. Oftentimes we find in the financial industry, it is those that have the least that are really taken advantage of. So the big guys, it becomes a reverse Robin Hood situation, which really concerns me. Let me get to this real quick, because I was just something else that you said in regards to liquidity. And you said that you didn't borrow the money because you needed it at the time, but that then you later in a question you asked that you raised the additional money, because I want to know how you spent the money for future situations, which means to me that you did have a liquidity problem, or you anticipated possibly having a liquidity problem, or would have one in future transactions. Could you? What's the deal there?
I appreciate that question. I stand by what I said. Robinhood was able to meet our deposit requirements. We were in compliance with firm net capital obligations throughout the period. And that additional capital, the $3.4 billion, wasn't to service our requirements. It was entirely to prepare for a future, even greater black swan event, and to unrestrict and remove restrictions on the trading and buying of these securities.
The gentleman's time has expired. Mr. Huizenga, you're next with 5 minutes.
Once again, Vlad pats himself on the back for Robinhood allowing people to use $1,000 of their money when initially investing with them. Also, I wish these representatives would realize how to speak into their microphones properly, because having them sound the way they've been sounding has been quite uneasy for the years and quite unprofessional.
The business channels had a good question from one of the Reddit readers, which is, so you recommended GameStop before. Would you buy their stock now at roughly 45? It started at 48 earlier today. You were talking about buying it and being happy when it hit cross 20. So are you buying that stock today?
Well, let me just say that investing can be risky, and my particular approach to investing is rather aggressive and may not be suitable for anyone else. But for me personally, yes.
So yes or no, are you buying the stock? And
for me personally, yes, I do find it's an attractive investment at this price point.
Quick question. Did you invest in GameStop because you were not aware of the payment for order flow? That's one of the accusations. People bought into this because they don't know that.
Sorry, could you repeat that question?
Did you buy GameStop because you were not aware of the payment for order flow?
My investment in GameStop was based on the fundamentals.
Okay. I think that answers it. I believe my time has expired.
Ms. Velasquez?
DeepFuckingValue comes back in with a very well thought out response in response to Bill Huizenga's strange question. Not much to say about this one. Good on DeepFuckingValue. Also, yes, I did leave that last crash in there because I thought it was quite interesting how someone, probably a United States representative, does not know how to mute their mic and instead broadcasts something crashing down in the background for literally the entire country to hear.
We do believe, Congressman, that that's an important question, and payment for order flow helps cover the costs of running our business and offer commission-free trading to customers. When we started, people didn't even think that there was enough margin left to make this business work, but we've been fortunate to make it work and to make it work for our customers.
Well, let's talk about why Robinhood restricted trades. I think your explanation about margin requirements charged by your clearinghouse makes sense. Is your clearinghouse supervised by the Fed and the SEC?
I believe that's
are the margin requirements charged by your clearinghouse in turn approved by federal regulators?
Yes.
And did federal regulators approve the value risk charge that was imposed on Robinhood?
I believe, Congressman, the value at risk charge is outlined in general terms in Dodd-Frank, but I'm not sure who approved the specific implementation of that formula.
So if anyone has a problem with your decision to halt trades, it's fair to say that their frustration should be directed toward federal regulation.
Congressman, I'm not trying to throw anyone under the bus and direct frustration anywhere. All I can say is Robinhood Securities played this by the books and played it basically the only way that we could remain in compliance with our deposit requirements.
Mr. Plotkin, appreciate your testimony that Melvin always follows laws governing shorting stock, but Melvin lost $6 billion in 20 trading days. Let me ask you about your risk management. Did your short positions exceed float?
No, they did not.
Does this guy ever stop patting himself on the back?
When you started investing in the stock, did you ever see it being valued at $483 per share?
At the time, I thought it was possible, but a very low probability, I thought.
Okay, thank you. Just a couple more questions. In terms of the platforms where you visited and discussed this stock with others, one was the Reddit subreddit WallStreetBets platform, correct?
Correct.
And at any given time, how many people were you talking to on that platform?
I wasn't so much talking to anyone individually, but rather making posts on that public forum.
That GameStop was an attractive stock.
Yeah, early on, I had felt that it was an attractive investment opportunity, and I had shared some of my thoughts as to why that was.
Did you discuss this on any other platforms? Are there any other kinds of Reddit or other kinds of platforms that you talked about the stock?
Yes, I have talked about the stock on some other platforms.
Okay. Did you ever talk about the short sellers that had bet against this company?
Yes, the topic did come up.
And about when did that occur?
Oh, since around the time I had begun investing in it, it was, as someone else has noted, it was an exceptional level of short interest in the stock since the time I had started investing in it.
Like I said previously about DeepFuckingValue, he's a very good speaker. Good on him for this.
That's the retail investor. And while I have supported for many years the democratization of finance, as we say, it's not just in Washington, D.C., but on Wall Street. The retail investor is known as dumb money. And there are any number of structures that are set up to take advantage of the retail investor. And I think it's worth looking at that because as much as we're celebrating Mr. Gill here, we're not talking very much about Mr. Salvador Vergara, who was featured in a Wall Street Journal story, who took out a $20,000 personal loan through Robinhood, invested it in GameStop, only to see the value of his position go down 80%. So Mr. Vergara is out $16,000 he doesn't have, that he owes to somebody else. And as much as I support the democratization of finance, we need to be thoughtful about this. So Mr. Tenev, my question is for you. You quoted a $35 billion number as what I interpreted to be profits in excess of deposited funds and securities. If you just look at your customers who traded in GameStop over the period of its increase and subsequent decrease, Mr. Tenev, how did your customers in the aggregate do? Did they win or did they lose?
Thank you, Congressman, for that question. I don't have that particular cut of the data top of mind, so maybe we can get back to you on that one.
All right, you don't have that. So you do have a $35 billion figure. The figure doesn't mean a lot to me because it's just a dollar number. Help me convert that to a rate of return. First of all, is that $35 billion, is that gross or net? In other words, is that actual profit or does it include margin shares, other forms of leverage that may actually not belong to the account holder?
It does include, Congressman, unrealized gains. So it's the value of assets, both including positions in securities and cryptocurrencies.
Okay, I get that. I get that. But again, 35 billion doesn't mean anything to me unless you can convert that into a rate of return. So do that for me. What is that on what asset under management number is that 35 billion unrealized against?
The asset under management number is not one that Robinhood has publicly shared.
Okay, but you can't share $35 billion. Sorry, Mr. Tenev, I just don't have a lot of time. $35 billion is a meaningless number. I need to know what that is in terms of return. So convert that for me into rate of return. So I can compare it to Treasury, so I can compare it to the S&P 500.
Congressman, with respect, I think the proper comparison is to customers not investing at all. Much of our customers are investing for the first time and are taking money that they otherwise would have spent or consumed and putting it in
Mr. Tenev, again, I don't want to be rude, but it's my time. Again, you offered up the $35 billion number, which, as you and anybody else schooled in finance knows, is meaningless unless you convert it into a rate of return. So just please convert that $35 billion number, which to the folks watching at home sounds like a lot of money. But what does that actually convert to in terms of rate of return, which is what matters?
Congressman, $35 billion is indeed a large amount of money, especially for our customers who are mostly small investors. It's more than most corporations, nearly all corporations have paid.
Mr. Tenev, again, don't make me be rude here. You and I both know that $35 billion of unrealized gains, if that's on a base of $100 billion, that's a 35% of return. If that's under $1 trillion, it's a radically different rate of return. So what I'm trying to get at, Mr. Tenev, here is you threw out the number of $35 billion. I actually think the right comparison is, what if your clients had simply invested in the long run in an S&P index fund? Would that number be more than $35 billion or less?
Congressman, with respect, I don't believe the right comparison is investing in an S&P index fund. I think the right comparison is not having invested at all and having instead spent that money and consumed it.
No, it's most certainly not. It's most certainly not, Mr. Tenev. And so I'm going to ask you, I'm out of time, but again, you put out the $35 billion number. So I think it's only decent, because you and I both know that a hard dollar number is meaningless unless you can convert it to return. So I'm going to ask you to convert that. Obviously, I'm out of time, into a rate of return for us.
You're out of time. Mr. Laudermilk, you now recognized for 5 minutes.
I'm really about to move to Connecticut just to vote for this guy. Tenev refused to respond to this question and went in circles with Jim Himes. Tenev got backed into a corner and literally couldn't get out of it. Well played, Himes. Well played. Also, a warning. The next clip, Representative Tom Emmer has one of the worst mics I've ever heard in my life, so fair warning.
Members on the committee have hardly asked you any questions. We've heard from a lot of the companies and funds involved in this event, but we've barely heard from the people that made this happen. Is there anything you would like to add to this hearing that you haven't been able to add yet, given that we're past the 4-hour mark on this hearing?
I appreciate that, Congressman. I do. I don't have anything to add at this time, just that I would be the first to acknowledge that investing in stocks and options is incredibly risky, and it's so important for people to do their own thorough research before investing. But that said, I tend to agree with you that folks should be able to freely express their views on a stock, and they should be able to buy or not buy a stock based on those views that they may have.
Mr. Gill, on that note, so how would you feel if these brilliant people that are asking you these questions today decided that you should not take the risks that you're making these thoughtful decisions on? What do you think about that?
I would probably ask for an explanation, Congressman, and to try to understand their viewpoint as to why they might think that, and perhaps we'd be able to talk through it.
Right. I appreciate it, Mr. Gill. I think we need to value the right of the individual to make decisions for themselves. And it's fantastic to see so many people getting involved and participating in the greatest financial markets in the world. We should be encouraging individual participation in the market by you and others. And we should want more people, more, not less. We don't need the people from the mountaintop deciding who's capable and who's incapable. We need more people having the opportunity to develop financial literacy, to build their own portfolios, to secure a safe and comfortable retirement, to grow their wealth so they can send their kids to college. And most importantly, in my opinion, we should strive for individuals to have the autonomy to do all that they themselves would want to do without having to rely on others or, God forbid, their government. I also want to thank Mr. Budd for using his time to mention blockchain technology applications in the post-trade settlement and clearing process. In light of this whole situation, it's important now more than ever that we utilize the technology that we have access to, and we don't have access to technology, and we do, have access to technology that is decentralized and can provide real-time trade settlements. Mr. Lynch and I have a nonpartisan bill that we will reintroduce very soon that concerns this. If we should exercise oversight of anything here, it's to ensure that individuals maintain access to our markets, individual investors, and discussions about over and undervalued companies only continue to increase. Unfortunately, average investors were locked out of the markets at a time of extreme volatility, while institutional investors were not. Well, I understand that a lot of what happened during this market frenzy came down to liquidity issues. Individual investors were in a vulnerable position and were at the will of online brokerage. We should be taking this time to discuss how to move forward in a way that promotes market access to all investors, just like it did last month. Congress clearly does not understand what credit is and how you utilize social media and catalyze the market movement. We've significantly underestimated the sophistication of America's retail investors, and we've not been focusing on improving market access.
The gentleman's time has expired.
Madam Chair, I appreciate
You're recognized for 5 minutes.
I mean, the guy is just the based boomer. Like, he's really well spoken. Good for him.
From your perspective, I mean, you've got a unique perspective. What do you think is the proper thing that should have happened? At some point, this thing got away from you and went totally into the stratosphere. And I'm just wondering what your thoughts are on how this should have worked.
Thank you, Congressman Lynch. I do know Westgate Mall quite well. I would say that, just to be clear, I had thought that maybe roughly $20 to $25 per share. I had thought that at that time, but investment theses, they evolve over time. As the fundamental events change over time, it's important to update theses accordingly. And I had mentioned that it appeared as though the stock price had got a little bit ahead of itself last month. But there's a lot outstanding. There's a lot that has happened in recent months to suggest that GameStop could indeed turn around its business significantly. And one big element of that is indeed one of the largest investors in GameStop, Ryan Cohen. And he has brought in some colleagues that could help him turn around this company. And fair value could indeed, sorry.
Yeah. Okay, I'm going to reclaim my time.
I still think it's great that DeepFuckingValue still reiterates what he thinks the future for GameStop is. It's a really good take. The business does have a pretty bright future ahead of it.
What would I, a user, have heard from you immediately upon your imposing the restrictions?
So, Congresswoman, immediately upon imposing the restrictions, customers would have received communications saying that they would be prevented from opening further positions in the relevant securities. Later on the day, on January 28th, around early afternoon Pacific time, we published a blog post that explained that the decision to restrict these securities was due to collateral requirements at NSCC and clearinghouses, and not on the direction of special interests or hedge funds.
Forgive me, let me interrupt you there. You admitted to making mistakes. Specifically, what mistakes did you make?
I admit to always improving, and certainly we're not going to be public. We're not going to be perfect, and we want to improve and make sure that we don't make the same mistakes twice.
But what were those mistakes? That's what we're here to learn about.
I think that, thank you for the question. It's an important question. On Thursday, we did restrict the buying of these securities. On Friday, we imposed position limits, which I believe was a much better long-term solution, one that we'll have in the future if anything like this happens again. We also raised $3.4 billion in capital to allow our customers to.
Thank you. I yield back. I see
trade
my
what they
time
want.
has expired. Thank you very much, Mr. Tenev.
Tenev just dodging questions, yet again in his typical John Wick fashion.
We'll go to Ms. Ocasio-Cortez for 5 minutes.
Thank you so much, Madam Chairwoman. Mr. Tenev, Robinhood has engaged in a track record of outages, design failures, and most recently, what appears to be a failure to properly account for your own internal risk. You've previously tried to blame clearinghouses for your need and scrambled to raise some $3.4 billion in a matter of days, but you've also, blamed a lack of industry-wide real-time settlement, or rather a lack of that settlement of trades. But Robinhood's requirements for margin have long been far more lax than other brokers for a long time. With, in December, just a couple months ago, you bragged about having some of the most competitive rates in the industry. And this is evidenced by your recent decision to raise those requirements. When Robinhood prohibited its customers from purchasing additional shares of several stocks, other brokerages merely adjusted the margin requirements on these stocks. So, Mr. Tenev, given Robinhood's track record, isn't it possible that the issue is not clearinghouses, but the fact that you simply didn't manage your own book, or failed to appropriately manage your own margin rules, or failed to manage your own internal risks?
Thank you for this question, Congresswoman. Let me address the margin point, because I think this is an important one that has been under-discussed. So in December, when we lowered our margin rates to 2.5%, one of the details that I think was missed is that most other brokerages have tiered margin rates, where the wealthier customers pay much lower margin rates than lower net worth customers. So you'll have someone that has $10,000 paying 9 to 10% for margin, whereas someone with $1 million pays 2%. So our approach was give everyone a uniform rate so that wealthier customers are not advantaged with lower rates than lower income customers. And I think that's a unique approach in our industry and is representative.
Thank you. I have to apologize. I have to reclaim my time for questioning. As many of my colleagues have also pointed out, Robinhood generates much of its revenue from the payment for order flow arrangements with market makers like Citadel, as well as Two Sigma and Virtue. And in 2016, the SEC highlighted ways that the payment for order flow created a, quote, potential conflict of interest with a broker's duty of best execution. And then one of the ideas that the commission floated in 2016 for addressing these conflicts of interest was to require that brokers pass on the proceeds of a payment for order flow. Now, earlier, one of my colleagues, Representative San Nicolas, said that Robinhood owes its customers a lot more than an apology. And I happen to agree with him. I believe that the decisions made by you and this company have harmed your customers. Mr. Tenev, would you be willing to commit today to voluntarily pass on the proceeds of the payment for order flow to Robinhood customers?
Congresswoman, I appreciate that question. When the statement you refer to was made, I believe 2015 or 2016, it was before Robinhood forced the entire industry to drop commissions and replicate our business model, which made payment.
So is that I should take that as a no, you're not willing to pass on the proceeds of payment for order flow to your customers?
When the other brokers dropped.
I'm just talking about today, right now.
Payment for order flow, Congresswoman, allows for commission-free trading. In the context of trading commissions, it's a much larger source of revenue in the past than payment.
Mr. Tenev, I apologize, and I don't want to be rude. I just have limited time. But if removing the revenues that you make from a payment for order flow would cause the removal of free commissions, doesn't that mean that trading on Robinhood isn't actually free to begin with? Because you're just hiding the cost in terms of potentially poor execution or the cost of lost rebates to your customers.
So certainly, Congresswoman, Robinhood is a for-profit business and needs to generate some revenue to pay for the costs of running this business. People were initially skeptical that the model, even with payment for order flow, would work when you remove commissions. And I think we've proven that otherwise by making this the standard model by which brokerages operate now.
I see. Okay, Mr. Tenev, I have to move on very quickly. I have a timeline question here for Mr. Plotkin. I see that earlier your testimony today was that your testimony today was that Melvin Capital had not engaged in. Sorry, Madam Chairwoman. I'm sorry. I think you're not muted. Sorry about that. Mr. Plotkin, earlier today, you mentioned that Melvin.
I'll be the first one to admit I don't agree with AOC on most of her policies, but in this particular instance, she really knocked the ball out of the park. She interrogated Vlad to the point where he got exposed for being the fraud that we all absolutely knew he was. Plus, her sheer popularity brought a lot more attention to this topic than any of the other Congresspeople's fans could have, ever. And that pretty much sums it up for our hero DeepFuckingValue and Vlad Tenev in this hearing. Maxine Waters closed out the hearing soon after, saying that the legislators are going to take the next legislative steps to hold Robinhood accountable for the events that occurred, which I personally think is a great thing. And don't worry, when Vlad inevitably gets locked up in federal prison, I definitely will be making another video on it because, I'm trying to get my tendies. It's also worth noting that DeepFuckingValue answered the questions the most quickly because when you have nothing to hide, the truth does come out quite easy. Thank you guys so much for sticking through this video no matter how much of it you watch. It really does mean the world to me. Don't forget to like the video if you liked it, subscribe if you like, if you're feeling generous. Until next time, Godspeed, and don't forget, hold the line.